Is Cardano finally turning around? Some charts suggest just that. For example, the total value locked, the Cardano, the ADA tokens that are being used in DeFi, is constantly going up. This here is DeFi Llama, and this here is a chart of how many ADA tokens over time is being used in DeFi. The application that's being used the most is Indigo, a 50% change in total value locked in the last month, but pretty much we see green here everywhere. It's great to see usage, but Cardano unfortunately is not yet out of the woods. For example, have a look at this. This is the ADA price divided by the Bitcoin price. So how is Cardano doing relatively to Bitcoin? And this is very long term, starting in 2017. And we see those massive rallies whenever there is an altcoin rally. But we also see the massive crashes. The magnitude here is really impressive. From the bottom to the top, 1,350%. And from the top to the bottom, minus 95%. And currently, Cardano, unfortunately, is not yet outperforming. The current momentum still, in terms of price, is against ADA. This is ADA relative to Ethereum, also a useful chart because very often altcoins are higher correlated to Ethereum than to Bitcoin. So have a look at this. This is a correlation matrix showing Cardano being correlated to Bitcoin by 0.64%, but the correlation of Cardano to Ethereum is 0.75%. Now, what does that mean? Correlation measures how much two assets tend to move in tandem with one another. So when Bitcoin goes up, then Cardano tends to go up as well, and vice versa. Now this effect is stronger with Ethereum and Cardano. So really, when Ethereum goes up, that's when Cardano goes up. And when Ethereum goes down, that's when Cardano goes down. In other words, if we want to isolate the Cardano specific price movements, we should rather be looking at the Ethereum based chart. So Cardano relative to Ethereum, not necessarily Cardano relative to Bitcoin. That correlation is weaker. And so one could argue that we just recently broke out of a bear flag. And in the grand scheme of things, at least relative to Ethereum, Cardano seems to be pretty cheap. Now you might have heard of Bitcoin dominance. That's this chart over here. This measures how much of all of crypto is currently in Bitcoin. So when we look at the dominance, we're basically measuring how important is Bitcoin as a fraction of all of crypto. And this recently tends to trend upwards because of all the speculation around the Bitcoin ETF. Right? Once the ETF gets approved, then all of this traditional finance money is likely going to end up in the Bitcoin spot market. Thus, in anticipation for that, the Bitcoin dominance tends to rise, Bitcoin tends to outperform the rest. Now there's the same measure for Cardano. Cardano dominance. How much of all of crypto is locked up in the market cap of Cardano? And this is going up and down pretty similarly to the Cardano relative to Bitcoin chart. At the bottom, only 0.4% of all of crypto was in Cardano. At the top, 4.6%. So this is an order of magnitude difference. The downside right now is 52%. The upside is 420% roughly. Now, since there's currently this massive impact by the Bitcoin ETF, maybe it makes sense not to compare Cardano's market cap to all of crypto, but to simply compare it to the rest of the altcoin market. There's another measure for that. There's a measure called Total 3. Total 3 is cryptocurrency's market cap except Bitcoin and except Ethereum. So we look at all of the altcoins, the market cap of all of the altcoins that are not Bitcoin and Ethereum. And now we can put the Cardano market cap in relation to this. In other words, how good is Cardano performing as a member of the altcoin market if we completely disregard Bitcoin and Ethereum? And that's the chart we arrive at. Unfortunately, not yet at the absolute bottom. And again, we see a decline since August of 2021. Downside here is 45%. Upside here is 260%. I find these comparisons very useful because it tells us if we ignore all the ups and downs of the entire crypto market, if we simply just make a decision, what altcoin should we potentially bet on, be it on rising prices or on falling prices, removing all of that noise that happens from outside is a very useful tool. Now let's say we want to time those ups and downs. We want to trade the ups and we want to trade the downs. We want to follow the trend. We want to buy in whenever Cardano tends to rise. We want to short the token token whenever it tends to fall. Seems to be logical given that the waves in Cardano are so massive. Now, one way to do this is with moving averages, and I do back tests of moving averages regularly on this channel. So I do simulations of buying and selling the token based on different moving average durations. So here's the idea. You want to bet on falling prices whenever the price is below the moving average, and you want to bet on rising prices whenever the price is above. So you're long during this time, and you're betting on falling prices during this time, and you would buy back in whenever the price gets above the moving average. The question though is, what duration is the best? What we see over here is the 200 day. But why not, for example, take the 100 day? Then the line looks like this, and we would be trading in a bit more frequently. We would exit a bit earlier, but then we could further shorten the duration, right? We could make this moving average get closer and closer to the price. A lot of people simply just take a random moving average, right? They plot the 200 day and say, this is where the resistance and the support is. But historically, this might not have been the best for Cardano, and we can make calculations to figure out what's the best, at least historically, for ADA. Let me introduce you to my magical Excel sheet, which starts in 2018, May of 2018, all the way to today. And we're simulating trading based on different simple and exponential moving averages. Buying and holding during the time would have given us a slight negative -4%. But there are some moving averages, right? These are daily durations that outperform buying and holding quite a bit. For example, here, the 20 day. But there's even better ones. We go further down, we go further down. Look at this, the 107 day, or the 113 day, or over here, the 130 day. The best seems to be the 137 day. You can also look at this in chart form. So this is on the x-axis, the duration of the moving average. On the y-axis, the annualized performance. This here is the best moving average, 137 days. And it's nice that this works really, really well for Cardano. I just refreshed this backtest because one of the premium members asked for this. They are going to set up a trading bot to follow exactly those moving averages. And let's look at the performance over time. On the y-axis, we've got a linear scale here. We can barely see the Cardano price. This is the backtested result. You can also look at this on a logarithmic scale. So this is a bit better, right? See how nicely this outperforms the trading according to the 137 day. We also have trading fees in here. So that's 0.2%. And so let's look at this now on the chart. 137 days. Click OK. And this is what we get. Make sure that you select over here the daily, 1 day. And we do have sometimes our failed signals, right? Where we buy in slightly above and then sell again slightly below. So this is not a perfect approach, but historically this is the best moving average. And currently that duration, the 137 day, tells us we should stay bullish up to 27.7 cents. So if Cardano now suddenly drops by 12% or so, we turn bearish again according to that moving average. It's probably not a magic pill. Nobody guarantees that this exact moving average is going to perform the exact same way as it had in the past. But I very much like that most of those moving average durations did actually pretty well. It wasn't that important what duration you take here, as long as it's not too short term and you're always trading in and out and generate all of those fees. Cardano seems to be a very cyclical, a very trend following cryptocurrency. And again, why use the 200-day moving average when the 137-day used to be the best? So the way to plot this is to simply go to TradingView to enter /, then select moving average and then double click on the line, change the length to 137 and make sure that you've selected the 1 day here. I do all kinds of backtests. I just reran the numbers for Cardano because a premium member asked for this. If you want to get your specific altcoin to get backtested, feel free to just join premium, message me and I'll run the numbers for you. The link for premium is down below. It's thebitcoinstrader.com, but you can also join simply our free Telegram. Also, link is down below.